Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden within corporate filings. And today's report is all about a company trying to get back on track with a bit of a hair-raising maneuver. Today we are diving into a recent filing from Aditxt Incorporated, a company that seems to be making some significant changes to boost its stock price and stay listed on the big stage. So, what is the main story here? Well, Aditxt is telling us they've officially gone through with a reverse stock split. Now, that might sound like a mouthful, but think of it this way: they are combining a bunch of their old shares into one new share. Why would a company do such a thing? The report clearly states it is primarily to meet the minimum bid price requirements set by the Nasdaq stock market. Basically, if a stock's price gets too low for too long, it can get kicked off the exchange. This reverse split is their way of artificially boosting that share price to avoid such a fate. And they are not playing around with this split, they're doing a 1 for 113 split. This means for every 113 shares you owned before, you now own just one. Imagine having 113 slices of pizza, and suddenly they all merge into one giant pizza slice. That is kind of the idea though, a bit more complex with company ownership. This move is pretty common for companies struggling with low stock prices. It is a way to make the stock look more appealing to institutional investors, who often have rules against buying very low price stocks. Now, don't expect the stock symbol to change. They'll keep trading under ATX on the Nasdaq. However, the report mentions a new Accession number, which is like a new identification code for the stock. It is important to note that this action doesn't change the overall value of the company. If you owned $113 worth of stock before, you now own $113 worth of stock after, just in fewer shares. The value per S-share goes up, but the total number of shares goes way down. They've also addressed what happens with small share amounts. If this split results in someone owning a fraction of a share, they'll be rounded up to the next whole share. This is to avoid complex payouts for tiny amounts and simplify things for everyone. The company also announced this move via a press release, which is included as an exhibit. This is standard practice to inform investors of significant events. It is worth remembering that while a reverse stock split can help a company stay on an exchange, it doesn't fix the underlying business issues that may have led to a low stock price in the first place. It is more of a cosmetic fix than a solution for poor performance or declining fundamentals. This reverse split points to some potential underlying challenges. Companies typically resort to this when their stock has performed poorly, often indicating investor concern about their business prospects, profitability, or future growth. While the immediate goal is to meet Nasdaq's listing requirements, it is crucial for investors to look beyond this maneuver and analyze the company's actual business health. A reverse stock split can sometimes be a signal that a company is struggling to generate value for shareholders through its core operations. It might also be an attempt to present a more attractive image to larger investors who might be hesitant to invest in penny stocks. However, if the company doesn't address the fundamental reasons for its low stock price, the stock may continue to decline even after the split. The key question moving forward will be whether this move is a temporary measure to buy time for genuine business improvement, or if it is a strategy to mask deeper issues. Investors should be watching their future financial reports and strategic announcements very closely to see if they can turn this around. In conclusion, Aditxt's reverse stock split is a clear signal of their effort to maintain their Nasdaq listing. While it is a necessary step for compliance, it doesn't automatically mean the company's future is bright. The real test will be in their ability to improve their business and deliver value that can organically drive their stock price up over time. What is your take on reverse stock splits and Aditxt strategy? Do you think it is a sign of trouble or a smart move to regain momentum? Let us know your thoughts in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more in-depth corporate analyses like this. Also join our growing community on Discord, linked in the description. Thanks for watching. See you next time on Corporate Decoder.